Hello, ladies and gentlemen, and welcome to our January webinar for SANAD Does Fintech. Today, we're going to be talking to our fantastic panel about how fintechs and microfinance institutions can partner together to bring mutually beneficial outcomes. We're, of course, bringing this to you on behalf of SANAD, and we're lucky enough to have with us Alban Rashidi, a member of Finance in Motion, who administers the SANAD Fund. And Alban, perhaps you can jump in and tell us even more about SANAD, what you guys have been up to and what's in the future.
Thanks, Ian. Yes, as the video kind of highlighted, first off, I'm a project manager for the technical assistance facility of the SANAD Fund. The SANAD Fund provides debt and equity financing in the Middle East, North Africa, and South Africa, and Sub-Saharan region for the purpose of growing small, medium, and micro enterprises. Alongside of that, there's the technical assistance facility that provides non-financial support, technical assistance essentially to improve the operations and trying to instill innovation through our partner institutions or direct support to entrepreneurs that we've worked with. And I think with fintech coming along, it's something that has so much impact in our space in providing financing and employment growth in the region. And certainly we welcome so much that partnership between microfinance institutions and fintech, and then in order to enable kind of the best mission to be achieved through financing and financial inclusion. Special thanks to Jamal, Thomas, Yousef for participating in this webinar, and I'm super excited to hear their insights and then kind of what's going to happen in the future in a space that we really want to advance. And thanks, Ian.
Lovely, thank you, Alban. So as Alban touched on, as I mentioned, today we're talking about how microfinance institutions and fintechs can work together. You've got fintech businesses that are providing, core technologies, core systems for microfinance institutions, be that loan origination, management systems, etc. You've got more advanced organizations that are helping them with things like risk scoring and complex analytics to help them be more efficient in both their sales and collections. And you've got machine learning helping with things like lead origination and KYC. So we're going to get into that and more. Our agenda for today, we're going to have a very quick introduction from each of the panelists. I shall ask them to introduce themselves, since they know themselves far better than I can ever know them, of course. We'll then move on to our Q&A, initially talking about how things stand here as we are today, and then moving through a number of polls, getting your opinion as an audience, and finally looking at what the future holds, what some of the opportunities are, and what some of the challenges might be. With a few bits of housekeeping, you can see this webinar and all of the others if you go to sanad.lu/entrepreneurship-academy. You can also find out what's coming up in the future and register for our February and March events already. You can provide feedback through an email that you'll receive at the end of the webinar. And there's also the opportunity to ask a Q&A. If you go down to the bottom of your screens, you'll find that you can send questions to me all the way through the webinar. We'll be holding those until the end. So if you do send one now and you don't hear it straight away, please don't think we've forgotten you. It's just a question of our agenda. And as I say, going through that, the final piece will be that Q&A. So great to hear from Alban just a moment ago. I'm now going to pass over to Thomas and ask Thomas to introduce himself. Thomas, if you can tell us a little bit about yourself and your organization.
Yeah, thank you, Ian. Hello, everyone. So I'm Thomas. I'm part of Rubyx. So I have a background in microfinance, working for more than 10 years in NGOs, in the entrepreneurship environment, and then in microfinance institutions. I spent like 4 or 5 years working for Baobab, formerly Microcred, in Africa, developing new product, working in the innovation team. And like 3 years ago, we created Rubyx with the idea of creating a solution to help microfinance institution leverage their data, better use the data, extract value from the data. So we've created a full-fledged platform for that data collection, storage, verification, a set of algorithms to analyze customer behavior, and a web application for field staff to get insights on their portfolio, to get eligibility to new products, automated products based on data analysis. So yeah, we have now around 10 clients in Africa and Southeast Asia. Yeah, so I think we'll get back to that later on all the
I'm
data.
pretty
data
confident
topic.
data will be a topic we discuss in detail. Lovely, thank you very much. I'm now going to pass over to Yousef. Yousef, if you could introduce yourself, we'd be most grateful.
Thank you, Ian. So yeah, I'm Youssef Koun. So I'm today a venture builder. So we provide a kind of inclusive platform to startups to accelerate their business, providing strategic and technical support, and particularly in some verticals as microfinance, payments, leasing, but also capital market. So previously I spent 20 years in two kind of domains. Spent 10 years in the banking sector for big Pan-African groups, which is Atijari Wafa Bank. And also I spent 10 years in the software industry, like Temenos, but also Sopra Banking Software, where I spent almost 8 years as managing director for North Africa, but also a digital champion for Africa. So this is roughly my presentation, and I'm very glad to participate in this webinar.
We're very glad to have you as well, Yousef. Thank you so much. And then to last but not least, our final panelist, Jamal, if you can introduce yourself, Jamal.
Sure thing. Thank you, Ian, and it's a pleasure to meet the fellow panelists. My name is Jamal Khayyat. I'm the co-founder of Changelabs. Changelabs was basically built to help solve some of the most pressing problems in the MENA region using startups and impact models. We have programs in Lebanon, in Jordan, in Egypt, and we partner with organizations like SANAD to be able to empower the youth and the entrepreneurs that are solving some of these problems across the MENA region. We do this through incubators, accelerators, large-scale festivals and events to shed a light and to celebrate those entrepreneurs that are taking on those problems. So very excited to be here with you and to share some of the stories that I've come across. We've run on multiple fintech tracks. So we've come across some very exciting startups and have some insights to share about the space. It's one that I'm particularly excited about.
Fantastic. We're excited to hear those as well. And with that, let's move into the first question that I'm going to put to our panel then, if we may. Yousef, I'll start with you. The very basics of this, why do fintechs and MFIs partner? You spent a lot of time, as you said, with Temenos, with Sapro, working on that ecosystem, helping those businesses to understand each other. What are the advantages and disadvantages?
So let's say, why do they have to partner? Because today, I will say all the financial institutions, they are building their own innovative ecosystem. In the video, you shown Advance, or Thomas spoke about Baobab. They are building with labs this ecosystem to support their business development, to imagine the new use cases that can be developed for each country. So doing partnership with fintechs, it's a way to accelerate the use cases that fintechs can bring on the ground, but also allows microfinance institution to have access to technology, maybe sometimes in low cost, using, let's say, to invest less than what can be expected. But the difference about the advantages and disadvantages, the thing is that if you take big MFIs, so Advance, it's a group, or Baobab, it's a group. So they have the same approach and governance about innovation as Pan-African banks, meaning that they can organize with fintechs to co-create together new use cases, or to build a kind of labs in order to incubate some use cases. So this is about the big one, but the small ones, the small MFIs with the only, let's say, a small portfolio, they don't have necessarily the budget to work with fintechs or to invest in innovation. And in the same time, fintechs don't have time to work on, let's say, projects that do not provide a lot of profitability or do not guarantee any scalability. So this is, let's say, the challenge to balance between the profitability and what I can call the low cost innovation. So in few words about advantages, so as I said, we can co-create new use cases. We can accelerate technology, but also, and in the video they spoke about it, we can bring mobile finance to microfinance. So we spoke a lot about digitalization, but the main idea is about mobile finance. The disadvantages, I will say, it's really the time to market, because sometimes with small MFIs, it's really hard to accelerate. So there is a subject also with the budget, how much MFI is able to invest with a fintech in order to accelerate the business. But also as a fintech, we have to accept also to fail. So the idea is how to trust the fintechs and to invest with them with the general idea that they can fail, that the technology cannot be necessarily a success. So this is, I will say, a first answer to your question.
That's very kind of you. Thank you, Yousef. Thomas, do you see the same thing? Obviously, you're running a fintech, you're at the coalface, as it were. Are these the types of advantages and disadvantages that you're weighing up on a daily basis when you look at new clients and new partnerships?
Yeah, I think it makes sense. It's for us, after 3 years of operations, that's very a challenge, because in the industry we have all these small actors that obviously want to go digital, because it's all over the place, right? It's all about going digital, and it obviously answers big challenges for the industry. But there is really a challenge for them to find the financial and also human technical capacity to do so, right? And at the end, except these few big groups that Yousef was mentioning, there is really a big challenge in finding the right balance to help this small institution go digital, implement innovative products, and at the same time making sure that the fintechs are sustainable and make money out of this project. And I think the donors have an important place in that on that question. They support, as SANAD is doing. The support is very important to really support continuously all the industry going digital, innovate, find the best project with the most impact, also to really concentrate on what counts most for the institutions.
Yeah. And Jamal, tell us about some of the fintech partnerships you've seen, because as you said in the introduction, you've got eyes on tens, if not hundreds of fintechs that go through Changelabs' various tracks. Which ones have you seen be successful in their partnerships, and what's led to that success?
Sure thing. So actually our most recent accelerator that we ran in Jordan was a fintech accelerator, and it was in partnership with SANAD. It was a great success for a number of reasons, but to focus on some of the partnerships that I saw, if I was to categorize the main reasons why we saw some of the startups needing to partner or opting to partner, we were simply reaching new customers, like we mentioned. Some of them were trying to overcome some licensing challenges. Sometimes that's very challenging for the startup, depending on where they are in their journey. It might be too expensive to acquire that license so they can access it, or bring new value propositions through these partnerships. A couple of examples come to mind. There was one startup, it was a savings platform for the unbanked called Tanda, and they were able to partner to launch a very successful marketing campaign that enabled them to in turn test their products and find out their strengths and weaknesses and continue to scale their businesses. Another example was Kayish. Kayish were a cashback marketing platform. What they were able to do is actually partner with another fintech startup that was a bit ahead of them. So that I look at as kind of a successful partnership, and one with very matching cultures. What it took for those to succeed, in my opinion, They had very strong business case. They had very strong alignment. They had very strong executive buy-in for both these examples from the beginning, which sometimes you see, maybe Thomas has seen this firsthand. When you start the partnership, the executive buy-in at the beginning, everyone's excited, but then at the end, sometimes people lose sight, and that has proven challenging for the startup. So as long as you have everything in contracts, you protect yourself, you protect your IP, everything's written down. I've seen that really help startups succeed in their partnerships in the fintech space. Just a warning that I've seen from some startups, and when they pursue those partnerships, is these partnerships can take a lot of effort, a lot of time. They have a lot of costs, so you need to watch out what you're jumping into. And just because a partnership is useful for year one or to meet one objective doesn't mean that it's an indefinite partnership. So it has to have very specific objectives.
Yeah. Thomas, Jamal mentioned that cultural fit, if you like, between the two organizations. And I think for a lot of people, when they think about a classic microfinance business and when they think about a fintech, they probably have in their mind quite clear ideas of what those company cultures might look like. One perhaps quite agile, fails quickly, pivots quickly, and another perhaps, should we say, more steady, traditional in its outlook, perhaps less quick to pivot. How do you assess that? Because as Jamal mentions, in the initial meetings, everyone's very excited, everyone's on their best behavior, if you like, a little bit like a first date. How do you get beneath that and scratch beneath the surface and work out which of these organizations are good long-term partners for Rubyx or for any fintech business?
So for us, because mfis are our clients, right? So we have to find a way to work with them, even when they don't have a proper innovation culture, I would say. So yeah. What we've tried to do, so we know the business very well. So for us at Rubyx, we really speak the same language as the mfis because we spent years working within the mfis, right? So what we've tried to do is really to develop a project methodology that is that really support them in taking the right decisions to implement the product and make it a success, right? We try to really take them by hand through workshop, a progressive methodology, trying to explain a lot how things are working, our scoring methodology, our approach about the data analysis and so on, even to loan officers. I spend time in branches explaining to loan officers how things are working because we really want to buy in from the whole institution. And that's really how we do it. We try to help them along the way to take the right decision, to understand why they're taking this decision and not that one. And slowly they get the culture, right? They get the understanding of things are working, what's good to do in an innovation project. I think they learn by doing, I would say, and we try to be as supportive as possible in the process.
So almost like a cultural diffusion from your organization to theirs.
Yeah.
Yeah, excellent.
That's a good way to take it.
We're talking today primarily about Middle East, North Africa and Sub-Saharan Africa, because of course that's where SANAD is active. Yousef, you've worked across much of that region, and Jamal, you have as well. I'm keen to hear from the two of you. Where do you think that where do you think the biggest opportunities for knowledge transfer are? Are there particular parts of the region, or is it fairly uniform? And Yousef, if I may, I'll come to you first.
So, as a knowledge transfer, I think that we should look to globally to the size of the markets. So, frankly speaking, today you have North Africa because there is a kind of maturity of the people, so it's easy to transfer the knowledge. And as I said, as Thomas said, maybe in sub-Saharan regions, it's more difficult because they don't still have the innovation culture. They are not ready to really take it very easily. So I will say north of Africa, maybe east of Africa, because currently they're using technology to disrupt all the way to do finance. And maybe we need still in West Africa, like we can call UEMOA zone or CEMAC zone, to have, let's say, more education about how we can use technology to accelerate financial services and how to bring financial services to the people. So this is my point of view about the regions in Africa.
Fascinating. Jamal, would you broadly agree with that? Do you have any points of that you would disagree with?
I agree to that. The way we've kind of looked at it when we're looking at the programs in the Middle East and comparing the ecosystem. I mean, to start off, there's three main hubs that you can look at in terms of capital flow. You have UAE, you have Egypt, you have Saudi Arabia. 71% of all capital invested in startups are in these regions. And then when I look at the space as a whole, when you focus on fintech, Bahrain stands out right away for me personally, from what I've seen in terms of innovation, fintech solutions, startups, and government support. They've kind of branded themselves as the fintech hub from what I can see. But then particularly when we were launching our program in Jordan to support fintech startups in Jordan, one of the most successful things we realized is that helped us with the program be a success is we saw how that in Egypt, the market in fintech space was about 3 to 5 years ahead of Jordan. And so, you know, given the same language and given the same culture, it was very effective for us to get mentors, developers, experts, investors from Egypt to support the Jordan market in that sense, you know, and capitalize on that knowledge transfer. So that was one kind of insight that we saw take place, and I think a lot of the startups can benefit by understanding that there's this dynamic, as opposed to always, for example, going to the go-to person, the UAE fintech, you know, superstar startup that is getting all the questions.
Yes, but operating in a very different marketplace, perhaps, from the target. We've just had a quick question come in over chat to say, is it possible to ask your Q&As now? You can put them across on the Q&A function now, but we will be putting them to the panelists at the end of the webinar in the last 10 to 15 minutes. So please do submit them now. We will save them to the end, but we will be taking note of them. We're now going to put a poll to you, the audience. So you should see that come up on your screen now, which asks you a few questions. We're keen to get a bit of thought and input from you as an audience, and we put some questions to you there. So we'll give you 2 to 3 minutes to engage with that, and then we'll come back to look at some of the answers. In the meantime, Thomas, you mentioned data earlier. It's, I guess, the elephant in the room. They talk about it as being the new oil. Obviously, oil, a resource that parts of the Middle East, North Africa, and Sub-Saharan Africa are hugely familiar with. Data, perhaps not so much. So what do you see as the opportunities that data science, and in particular artificial intelligence, machine learning, bring to the microfinance sector?
Yeah. So, what's interesting? So I really keep the focus in microfinance institutions, right? Because that's what we're talking about. And
yeah,
you know, it's interesting to see that microfinance institution they have a lot of really highly predictive data available in their systems, and they don't really use it, right? And that's, I mean, being able to leverage this data, extract value from it, can be very, very powerful in the transformation of their business. So basically, and that's what we try to do. We try to really focus our work on using the data they have already. So we've seen a lot of, you know, credit scoring approaches that are using alternative data, you know, the way social networks are used, the type of phone that is used, these kind of things. And that's interesting because it's a way to assess potential clients, right? But with the existing data, we can really transform already the business by basically analyzing the whole portfolio of customers every day. You know, AI is really about computing power, right? And having this computing power available, we can really go through the whole portfolio using data and assess the behavior of the customers every day. So I would be almost like running loan committees for the whole portfolio every day.
Yeah.
Right. And
And
based
how
on that,
easy is it to get that data from the client? Are they ready to share that? Do they understand the value of giving that data across to yourself as a third party to analyze?
Yeah, so I think that you have to show what you're gonna give back, you know, using the data. Yeah. And what we do is based on this customer behavior analysis and a set of business rules that we set up with the institution, we provide amount recommendations for disbursement without appraisal, basically, right? And so it's really impactful because it transforms the way you can give loans to your customers, right? And you can start renewing loans without appraisal. You can start doing really small loans, small amounts, because now it gets interesting financially to disperse €100 or $100 because you don't have a human working on the file, right? So it's really helped to create new product, new experiences, to accelerate the way you give capital to customers. Yeah, so I think in a nutshell, using the existing data from MFIs with the right algorithm and trying to avoid black box effects, that's also something very important. We can really transform the customer experience and have a strong impact on the way we serve the end customer for microfinance.
Fantastic. Jamal, I could see you nodding along there. You agree anything that you would want to add to what Thomas has said?
No, that makes sense. I was actually reading one of the questions that came in. So, but yeah, no, I agree with Thomas. I think he brings in a very specific point of view regarding his interactions with microfinance institutions that I think adds an important angle to this conversation.
Fantastic.
And if I may add, maybe
please do.
Today is some businesses about how when you have a merchant, you have today some startups coming with a new way of doing finance. They say to merchant, okay, let's be you are my single point of selling, so be my point of selling, and the more you use my payment tools, the more you use my app to accept my payments, the more your credit scoring is raising. So as a startup, I'm able to negotiate with banks or MFIs loans in order to accelerate and help your business. So today, data is no more only at the MFIs level, but you can take payments companies that can also push merchant to use more digital payment systems in order to increase their credit risk. And so they can have access to these microfinance loans. So data is coming from everywhere. The main idea is how to explore and exploit this data.
For sure. So that leads us to another, I think, quite interesting question, which is, in other parts of the world, we've seen governments act fairly forcefully to regulate who can access what data and what they're allowed to do with it, you know, whether it can be sold on, passed on without the permission of the end consumer. Do you see that as an ethical question in the region that we're talking about? And is it one that's being well answered as we speak today, or is that something that requires, you know, further thought from governments, further thought from organizations? And Jamal, I'll go to you on that, if I may.
I mean, I think it depends on where in the Middle East you're looking at. So if we look at the UAE, it's some of the most progressive data management policies being implemented across the board. The data standards are being refreshed as we speak, and it's pretty fascinating how cutting edge the country is being from what I'm seeing in terms of managing data. But then if we look at other parts of the Middle East, I think it's still lagging behind the culture of understanding data management and putting it to use. as well as being data-driven in terms of the organizations that we see in the Middle East, I think still there's a lot of opportunity there that fintechs can leverage.
Excellent. So I'm just going to go to the poll that we asked. There's some interesting responses there. So Thomas, you'll be pleased to hear that the majority or the largest portion of our audience think that credit scoring is probably the clearest indication of a problem that fintechs can help microfinance organizations to solve. That sounds like it could be good for business from your side. And they also agreed with our panel that different company cultures is quite a big challenge. In their view, the market that has the biggest potential for the successful partnerships is sub-Saharan Africa. And the other options we gave them there were the Middle East, North Africa, and Asia Pac. Would you agree with that, Thomas? Do you disagree? What are your thoughts?
So obviously, sub-Saharan Africa is the market I know the most.
Yep.
So I know there is a lot of potential, but there is also a long way to go. A lot of institutions are very small, are really working the old way, and it can be a struggle sometimes to work with them. I feel that in Asia we have more mature institutions on the technical side, but then Asia, these are really huge markets, right? There is a lot of people there, and there is still a very high need for better financial services. So I think the potential is still pretty high. And then there is also, maybe it wasn't not in the poll, but Latin America is also a continent very interesting for innovation. It's a bit more mature. We have a more diversification of products, but still there is a lot to do, especially around data. There is a lot of data available and not that many good products using them. So, I think there are really a massive amount of opportunities around the world. Yeah.
Fantastic. I'd strongly agree with that. Yousef, when we spoke before the panel, you talked about micro crowdfunding as an alternative to kind of classic microfinance. Can you talk us through that and the role that fintechs have to play in that?
So first, why we can consider maybe to explain to our audience why we talk about micro crowdfunding. So if we go to first about classic microfinance, initially it was made to allow people to take on reasonable and small business loans safely and said in a manner to take it consistent with the ethical and lending practices. So this is what we saw in the video to help for agriculture, for example. So crowdfunding is a little bit different. It's when a crowd funds also a project or a business, rather than to have one or two investors, we have a lot of people that can invest. And in the crowdfunding, I will say we have 4 ways of doing funding. We can just donate, so we just give money and we have nothing in return. We can have a debt, like a loan, so it's a peer-to-peer lending, or to work as a reward. So we give money, but in back we have the product, for example, or a part of the product, or we can transform it into equity. So equity is to have a part or a portion of the company. So finally, micro crowdfunding, it's another way to finance small businesses and offer this capacity to leverage the saving of the public money. So instead of having a saving account giving you 5% of interest rate, you can maybe invest via crowdfunding, via platforms that do the job to check if the project is okay, if the project is not risky, if it's linked to an ethical lending practices. So you can invest. So it's another way to start to do microfinance. It's another way. So if I take the example of Africa today, so Jamal told about the regulatory framework. If I talk about crowdfunding, the regulatory framework in Africa, you have only 3 countries that have put in place a regulatory framework for crowdfunding. It's Morocco, Tunisia, and Nigeria. And still 10 countries like Rwanda, Kenya, but also Cameroon, Gabon, more in Central Africa, they are working on a framework. It means that there is a new potential or an alternative way to finance small businesses. And also for people that have that are saving money, it's another way to invest in microfinance. So this is, I will say, another alternative that can accelerate the business. And we know that microfunding platforms are using a lot of technology. So because the idea is to be a platform between investors and projects. So there is not a lot of people behind the platform, but more a lot of technology behind it. So this is, I will say, a good alternative to microfinance and to accelerate the finance of small businesses.
Absolutely. I think Alban has a question directly, so I'm just going to bring him in to the chat to be able to ask that.
Yousef presented it as an alternative. Since we're talking about partnerships, do you see an opportunity for the crowdfunding technology to be used for group micro lending by the microfinance institutions? Because I think when I think of fintech, you have the technology, and then there is kind of that user experience or lending experience for microfinance institutions. So this that you brought up could be an opportunity for, okay, how can you enable a platform to be used by a group, by microfinance institutions, to do crowdfunding or small business lending through a group? Is there challenges there?
Yeah, you're completely right. So when you're a microfinance institution, what you have customers that you sell your loans, you engage them via loans, but the microfinance need also customer that can have saving accounts. So if you bring together people that are saving their money, but instead of just giving them an interest rate to say, please invest in the same project when the microfinance is financing. So let's take an example for a project even of $10,000. You can say that the microfinance will finance 5,000 because it's and the other 5,000 can be transformed into a crowdfunding approach. So it's it's another way to bring people that want to save or to invest, but don't have, let's say, 1,000 that have, let's say, only $1,000 to invest. And so the micro crowdfunding can be an alternative mixed with the microfinance or MFIs. But you need to have a framework, a regulatory framework. So if I take the example of Morocco, crowdfunding will be done to accelerate startups. So if it's a startup in technology, okay, but if it's a startup in the agriculture, so usually microfinance can help them, or either crowdfunding approach can be another way to get finance. So for me, you can mix them, and microfinance, big one, can put in place kind of, let's say, Advance or Baobab. They can have one platform for all Africa and saying, this is the micro crowdfunding platform for Advance. They do the study of the projects, they rate the project, and they put the project to get new customers that want to invest on those projects. So this is the kind of example that can be used.
That's fascinating. Thank you, Yousef. So we've talked there about kind of peer-to-peer lending or investment. We've talked about data. Jamal, what are some of the other key trends that you're seeing across fintech, across entrepreneurship more generally in the region?
When we look at the last few years, it's actually been a very exciting time to be in the space. Well, for entrepreneurship in general and fintech. If you look at like 2020, about $1 billion was injected in startups across the Middle East. That's like increase of 20% from 2019. 2021, about 1.2 billion. So in the first half of 2021, mind you. So it's pretty exciting time to see all this capital and all this activity. And then you look at the number one driver of deals is fintech startups. That was actually one of the few sectors that was positively impacted by the pandemic, as opposed to other startups, maybe in mobility or otherwise. So you saw that kind of impact from the pandemic on those startups, coupled with all this capital that's flowing in. Another interesting trend that we've come across is a lot of the startups are getting funded from global investors. So about a third of funding that's flowing into the Middle East is now coming from international sources. And this is unprecedented. So you have a lot of money, you have good deals, you have fintech space blowing up. So it's a very exciting time to see all this coming together. And in 2021, there was, if you look at top 10 deals in fintech in entrepreneurship, about 3 of them, I think, was all fintech startups.
Yeah, and we talked actually in our previous webinar when we were talking about raising capital, about this kind of glut of money that seems to be available and looking for a home, if you like, and some of the consequences of that. You know, is the due diligence being done as diligently? Is it just that deals are moving up in terms of deal size? Obviously, with these things comes the pressure then for success. Thomas, what do you think are some of the success factors where you've got you know, that data component, particularly in making projects and partnerships work? We've talked about company culture, and we've talked about understanding how data can be used. Are there other things that we haven't covered that are important, and are there any misconceptions about what you need to be successful?
So obviously, I think the regulatory environment is important. In some countries, we had to stop projects because of that.
Right.
You know? Yeah.
Never good.
We started pilots, and then, you know, at some point after a few months, we had to stop because of that. So that's obviously that's key. And we see that in some countries, the evolution is almost to be more protective than a few years before, right? So it's, some countries are really still struggling to find the right support to the innovation sector. So that's key. And then yeah, as we said, the company, you know, the financial and human capacity, we need to be at a minimum level to be able to really implement an innovative product successfully. Yeah, I think these are the main things I see. I would say, and obviously then the market as well. We see that some markets are more mature and ready. You know, the technical literacy of the customers, the internet coverage, especially in remote areas, is also important, because at some point, if you want to, you know, capture loan applications in the field, try to cover rural areas, and you don't have any internet coverage, it starts being a bit more complicated. So the infrastructure is also very important. So it's a mix.
Yeah, I think we may have lost Thomas just for a moment there. Apologies. So a quick question again here from Alban. You talked about the importance of doing some roadshows and introducing your, you know, different business models to regulators, and regulation is something Thomas just mentioned. Talk to us about how you see that influencing, I should say, the regulators in different markets. Is it the job of fintechs, of MFIs, to actually go out and create regulation and to be involved in the creation of regulation, or is that something that governments need to be leading, and actually those organizations should stay out of the way and kind of get what's given to them?
So for me, I think my point was just that one thing that we worked with Jamal on or in Changelabs is that they started doing roadshows in order to educate the regulators in terms of what these fintechs are trying to achieve. And that way the black box, kind of that mystery, is kind of gone, and you have that partnerships not only between microfinance institutions but as well with regulators, so that you can enable change that's responsibly. I don't know if you have anything to add, Jamal, because I know you've been hands-on on that.
Sure thing. Yeah, I mean, it was really exciting, and it was great to see how much rich discussions that were really needed and necessary take place when we put together this roadshow. And the idea was that there was a lot of conversations that needed to be had between the startups and the regulators, because it's in both their best interests to be aligned, right? The startups want to influence how regulation is being set up and want to be ahead of it in case that they need to pivot or change things accordingly. The regulators need to build for their customers in this case and build for the startups. So a lot of very applicable solutions in the marketplace were just not known by the startups we were working with. So that conversation helped kind of bridge that gap. It was also very exciting to see when we started connecting some of our network from, let's say, Egypt to our network in Jordan. Whether it's from the regulator space or the entrepreneurs, there was a lot of lessons learned and knowledge transfer that can happen there. So on both those fronts, communicating and sharing the ideas and building together was something that we see can be very beneficial for the region, and we can do more of that.
Excellent. We're going to go on to some questions now from the audience. Tarek sent in this question a little while ago. Tarek, thank you for bearing with us, and I'll put this now to the panel. He asks, as an early stage startup and targeting primarily sub-Saharan Africa, looking to do their first pilots and experiment with an MVP solution for a microfinance institution, where should they be targeting? Who are the best people to be in touch with? Are there particular countries that he should be focused on? And Yousef, I'll come to you if I may.
Yeah. So first, it depends, I will say, as a startup for microfinance, on which use case you are working on. If it's like the case of Rubyx, more working on data credit scoring, or you are more working on how to engage customers. So it depends. So this is the first point, to know more about the use case that you propose. Then the second topic is who you have to contact. So usually, as I said in the beginning, it's better to contact the big MFIs, because they have at least a culture of a startup, and they know how to manage innovation. This is a way, but there is another way, is in fact to talk with companies like SANAD to say, okay, I have an idea, and SANAD have the network of MFIs, for example, that can accelerate and give them access if the use case is really pertinent, so they can give them access to the network. They can also contact what we can call venture builders, because their job, in fact, is to check if the technology reply to a business, really to a business need, and they have the network of customers that are saying, okay, if you found a technology doing that, I'm open to hear about it. So I will say you can have access directly to some big MFIs. So you have to list your MFIs to know them, or to use some funds, some companies that bringing funds so they can accelerate the business case, or to talk with a network of venture builders that can accelerate also your access to some customers. So this is, and the last topic I will say is, in fact, to use the social network. So today, if you have an idea, and to check if your idea can have a market, it's easy to invest a little bit on the marketing, and first test on a social network if yes or no there is a market, if your idea can be interesting. So there is also a little bit before to invest on an MVP, maybe sometimes to build a marketing strategy to check if yes or no the market can be interested. So you can do marketing on LinkedIn. So if you have a lot of people replying to your campaign, it's a good approach to get leads. But you can go also on Instagram, on Facebook, because on microfinance the customers are there. So if you have an idea, you can test your idea, and if the market saying yes, I'm interested in agriculture, or what kind of investment that we can do, it can be also another approach. So I would say there is 4 ways to access to the market.
Fantastic, Thomas. How did you do it? Because you've done it, right? This is that was your lived experience, was going into sub-Saharan Africa and building partnerships and building out client base. So what was your approach?
No, I think what Yousef just said is pretty is right. Can you hear me well? I see that my internet seems okay. Yeah, no, I mean, like, obviously using the network of, people we know around, that's a small industry. So that's obviously a way, using their own contacts. But then, yeah, trying to get in touch with the big players, and then working with donors is a really interesting way. And we've done that before. You work with the donor, and then the donor can help you find the right MFI to implement your product, and can even finance some of the costs of implementation. And then, it creates a relation with the donor as well. You can also work on learnings that you can share with the industry. So that's really an interesting approach to really a partnership with donors for that. And then obviously, I think Tarek was asking about countries. It depends a bit, but some countries are way more mature when we talk about innovation. If you look at Nigeria, for example, that's a very interesting country. A lot is happening there. That's a really big market, biggest market in Africa in terms of people. So there is a lot happening, a lot of highly skilled people in the country, but also a lot of competitors. So, and if you go to a country like, Burkina Faso or Mali, that's very different, very lower level of innovation. The infrastructure is not as good. So, it depends a lot on how you want to position yourself. Do you want to be one of the first, but then you have more challenges, or go into a more mature market, Eastern Africa as well? If you go to Kenya and you want to do, digital small loans, then good luck, because, it's already really well established. So, it's really about the use case, as Yousef say, and understanding where you would be well fitted to, take your place.
Yeah, and I suspect, Jamal, you might have a view that there are other networks that a small, growing business can approach, including, accelerators and some of the programs that organizations like Changelabs run.
Yes, but I'll do better than just to use this as a plugin for Changelabs, and maybe I can share some of the advice I would give to a startup in our program that would ask me that. Fantastic. And what I would say is, I would recommend to go to the market that you know the best. Being a startup, you really want to deeply understand your customer. And when you understand where they are and how they behave, and how you understand where they are, then you start seeing, okay, given that my customer is of the following profile and I want to reach them, which partnerships can help me reach them? And then that will help you answer right away by default which country you're in, as opposed to seeing, oh, in that country, that's a really good partner potentially, but is it going to really help you achieve your objectives?
Fantastic. We've got a question here from Niall Eunice. We're running close to time, so if I can ask you as panelists to be as concise as possible in your answers, but can the panel share their perspective on the current role of MNOs as key participants in the microfinance ecosystem, and how those traditional roles and responsibilities may evolve between the existing participants and new entrants? And Jamal, I'll come back to you on that if I may start with.
Sorry, the question had to partner with MNOs, like telcos?
Yeah, what's their responsibilities, or how do you see their responsibilities evolving?
I mean, when I look at the partnership that I mentioned with Tanda, I mean, it really depends on a case-by-case basis. So please reach out to me with that question. Whoever that is on the chat, I'm happy to take it offline with them. Jamal Khayyat on all social media accounts, and I can understand exactly what they're referring to.
Sure.
I can give maybe some on this point. So there is some studies in about microfinance in Africa and how we can bring mobile finance to microfinance. And in fact, the partnership with MNOs is the biggest one. Microfinance, and I will give you an example with the Baobab, I think is in Cameroon. They have done a partnership with Orange Money. So all the users of Orange Money can have access to microloans via Baobab. But and as I said, they used the fact that users of Orange Money use a lot the mobile money. The more they use the mobile money, the more their credit scoring is getting high. So they have an instant access to a loans that is pre-calculated the day before. So each day they know how many, let's say, the amount of the loans that can be available. And this is a better way because MNOs, they are the best one, I will say in Africa, for example, that have the better network to do distribution of products. So it's easy to just plug to MNOs to accelerate the distribution of a microfinance product. And this is one, and there is a good statistic of that in Africa. So you have more than 50% of microfinance trying to do a partnership with MNOs just to have access first to their client and second to the network.
Fantastic.
Can I add just a word on that? Very briefly. It's interesting because we see Orange, they've got the banking license. Now in Ivory Coast, they launched Orange Bank, and they're doing loans by themselves. So they are really disrupting the ecosystem. Okay. And I think for MFIs, the challenge would be to leverage the historical relationship they have with the clients to keep, offering a better customer experience, use really the fine knowledge they have to the customers to serve them in a way that MNOs can't really do by themselves alone, right? And that's the real challenge of, you have partnerships on one side, but you also have MNOs wanting to do everything by themselves, and you have MFIs that have this close relationship with the customer. And, it's really almost a war going out there about serving the customer the right way.
Excellent. Well, on that informative point, I'm afraid we've come to the end of our time here. So it just reminds for me to thank SANAD for creating this event for us. You can follow them at SANAD_MSME on Twitter. Thanks to our panelists, to Yousef, to Thomas, and to Jamal. My name is Ian Jenkins. I've been the moderator from Base 115. We'll be back in February. So please do look at the SANAD social media, go to their Entrepreneurship Academy page to sign up. And we'll be talking about how mobile and digital money are disrupting financial inclusion. So we'll be starting there, I guess, a little bit where we finished this evening. Thank you all. We look forward to seeing you then, and have a good evening.